Guys, things have taken a turn for the worse today in the cryptocurrencies. We've had quite a streak of bearishness across a lot of asset classes today, including equities, various segments. A lot of things are in the red, but things in crypto are looking quite precarious. I've got the Bitcoin chart up right now. The reason I'm doing Bitcoin and Ethereum is because they lead the sentiment on everything else. Where they go, the whole crypto space goes. So I want to make some parameters very clear in Bitcoin and Ethereum in this video, just so you can set up your own strategy on how you're going to protect yourself if things do turn for the worst, or if you are looking for a better buying opportunity. So on Bitcoin, I've been harping on a couple of support levels that we have, and we actually have three different patterns on this chart at the moment. The purple is our primary, and that is still intact and hanging on just by a thread. And that called for our April, May, springtime 2021 high as being a major third wave, and then our pullback into the midsummer to be the fourth wave. Ever since then, we had what looked like a 1-2-1-2 nested setup, but then our pullback at the beginning of December almost invalidated this whole thing. You can't pull back and invalidate 100%. You can't retrace it 100% of the first wave if you're in a wave two. So we came very close. We have several cryptos that did invalidate this, but Bitcoin and Ethereum are hanging on right now. Ever since then, we did have some what looked like a bullish development, but we're pulling back again quite sharply today. I'm going to shift over to Ethereum real quick just to show that one as well. The patterns are almost identical. Ethereum did not pull back as sharply in December as Bitcoin. Here, the primary pattern is actually this aqua blue color, and it's the same thing. We have a nested 1-2-1-2 setup for our final fifth wave, and so far it's holding together, but we're getting very close to support. I had an alert set in 3,500 region, which was triggered, so I've moved it down. So as for supports, here's what we're looking at for Bitcoin. This is what I'm going to start with. We are get this thing straightened out a little bit. There we go. We have our 1-2-1-2. If we break our support at 39,600, then our purple pattern is invalidated. So we came very close before, we're coming very close again. And that is because when we take a closer look at this, this is supposed to be a 5-wave impulse and a 3-wave correction down. This cannot go below the origin of the first wave. So that sits right around 39,600. That is, of course, written in here, describe the purple pattern. If that breaks, all hope isn't lost, because that doesn't necessarily mean that we're going to crash directly into a red pattern. There is a support below that at 35,500. This is kind of it's not an exact support as the purple pattern support will be. And this pattern would call for this entire rally to be an ending diagonal structure. So an ending diagonal in Elliott wave theory is also a 5-wave motive structure, but each of these subwaves are either zigzags or they're not as cleanly structured. You don't see as many impulses. They generally retrace very sharply, and then you have very strong rallies back and forth. So a lot of whipsaw. Typically, they don't target as high as an impulse wave would, but cryptos are a little different. They're unique. They do their own thing. So for that to maintain itself, we would need to hold 35,500. So again, if we break our 39,600 support in the purple primary pattern, that pattern becomes invalidated. The green pattern becomes our primary. That would have this whole thing being an A, B, C zigzag up, then maybe an A, B, C zigzag down, and then maybe we continue the motive wave. Now, this would still be a huge flashing red light if this happens, because you can see there's not much gap between the 39,600 mark and the 35.5 mark. If we break 35.5, you can't confidently say we're going to be in the red pattern, because you're not going to know you're in the red pattern until you see a confirmation. And we'd have to break 28.8, so 28,800 to get confirmation. If you're waiting that long to get out of Bitcoin, you might as well just hodl it. There's no point in getting out of that point. And the reason for that is, again, in a diagonal, you can retrace as far down as you like. So it may not make any difference in the real world. I've set the support at 76.4% of this entire green wave one. And that is what you're seeing right here. So again, 35.5, if we break that, that is a very strong indication that we're going to be in that red pattern. And that red pattern would take us down to 24,000. That is the standard 0.764 retrace. If you go by Elliott wave Fibonacci pinball ratios, that would be the standard pullback for a fourth wave, which came up short earlier this year. The same story plays out for Ethereum. We have our alternate diagonal pattern. And in that situation, same thing, we'd have to break down. So we had 3,300 as our main support. That was based on the 61.8% retrace of our nested 1-2. But again, in theory, you could retrace the entire thing without validating 1-2 setup. So our actual support would fall around 2663. That's this red line here. So when we zoom up and take a closer look, you'll see that we're getting uncomfortably close to the original support, which was 3,300. If we fall through that, if we break the bottom of the origin of what I'm calling a wave one, then this is no longer wave one. It is more accurately described as a zigzag correction up. And just like that, we'd be in our green pattern. That will become the primary alternate pattern. That pattern should hold 2188. So I do have a support drawn there. And it's the same story there. That support falls at the 76.4% retrace of this entire thing. So again, it's not a hard rule. It's not a clear line in the sand, but that would be a very strong indication that we're going to follow through with our red alternate pattern. And that pattern would take us down to, that's right, 1151. Just like in Bitcoin, we have a 0.764 extension retrace support level. That would be the standard pullback that we would hit from where we were before. So it would be a long, nasty fall. And we'll confirm that once we break 2188. I'm sorry, 2188. Breaking that will very likely mean we're in the red pattern. It won't confirm until we break 1703, which is the low that we hit in the summer. And like I said, with Bitcoin, if you wait that long to pull out, it may not be worth it. So you have your strategy. You do you. Some of us will hodl. We're long-term investors. Some of us will get out of here right now. Maybe you're short-term traders. Maybe you want to lock in a profit that you've made up to this point. Maybe a mix of each one. Maybe you want to keep a core position and sell some of the others. And I'm going to tell you right now, if these major cryptos are behaving the way they're behaving, there's a very good chance that things are going to turn really ugly in some of the altcoins that I've been covering. I'll continue to cover. The only thing that's blasting right now is still Chainlink, and even that's starting to pull back a little bit. So if you haven't subscribed yet, don't forget to do so, because things might start to get a little crazy. And if you enjoyed my video, don't forget to like. Till next time, thank you for watching and happy trading.